Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Kristen Sieffert, president of Finance of America Reverse, a retirement solutions company that provides proprietary tools and resources to help older Americans make strategic use of home equity as a method for financing retirement. Kristen, it's great to meet with you. Welcome to Trade Talks.
Thanks, Jill. Thanks for having me.
Over the last 3 decades, the number of people over the age of 60 burdened by traditional mortgage debt has doubled to more than 40%. How is Far's new Equity Avail product addressing this trend?
Yeah, so the retirement stats in our country are fairly bleak, especially when you look at people's readiness to have this financial stability to support a 20, 30, 40-year retirement. And on top of the existing population of people 60 plus already carrying mortgage debt, over 1 million more people every year over the age of 60 are entering into a new 30-year fixed mortgage. People really need alternative solutions than the traditional products. And oftentimes a reverse mortgage just doesn't have a high enough LTV to help them pay off that existing debt. So we created Equity Avail with the goal of being able to serve a larger population of those people, really giving people better tools, better options once they reach their 60s than to refinance into a 30-year loan. So now, rather than doing that, refinancing into a 30-year loan at the age of 60 or 65 and carrying mortgage debt into your 90s, you can refinance using Equity Avail. You only have 10 years of mortgage payments before they're eliminated altogether, which is a huge difference in cash flow for people and also affords them more flexibility in the event something unexpected happens that changes their financial position. Things like medical bills or an unexpected job loss, which actually happened quite a bit to our demographic during COVID.
What differentiates Far's Equity Avail product from other mortgages, and how is this different than a reverse mortgage?
So Equity Avail combines elements of both a traditional mortgage and a reverse mortgage. So by building in the reverse mortgage negative amortization components into the product, we're able to offer a lower term and a lower payment amount than a traditional forward mortgage. And by building in a small forward mortgage component, we're able to offer a higher LTV than a traditional reverse mortgage. So it really allows borrowers to refinance out of their existing debt, cut their remaining payment obligation term to only 10 years and drastically reduce that monthly mortgage obligation. We just launched this product about 2 weeks ago into the market. And the first loan we received were borrowers, they were ages 62 and 63, married, and they had 28 years left on their mortgage payment. They had just refinanced into a new loan about 2 years ago. Their monthly mortgage payment was $4,900 a month. So they really wanted to start cutting down on working so much, but they couldn't afford to do so with such a large monthly mortgage obligation. And they tried to get a reverse, but didn't qualify. So with Equity Avail, they were able to cut that payment from $4,900 down to $2,200 a month, which is a savings of $2,700 per month, which is really significant when you think about the cash flow impact to their bottom line. And instead of paying that payment for the next 28 years, they only have to pay that payment for 10 years and then it goes down to zero. So this really allows them the freedom to ease into retirement and do the things that they wanted to do.
Why is this need significant, and how are you providing folks with much more financial flexibility later in life?
When people qualify for a regular mortgage today, the rule of thumb is the payment shouldn't exceed about 28% of your monthly income. Yet 50% of people entering retirement have that traditional mortgage, and the payment ranges on average between 30 and 50% of their monthly income. So having that much cash flow tied up during a phase of life where unplanned events happen a lot more than normal makes it really challenging to have the confidence that they won't run out of money before they die. So we think Equity Avail is a really elegant solution. It allows them to have a glide path to age in place. So as people start working less and earning less, their payment decreases with them and allows them more flexibility, more stability, more peace of mind as they continue to age. And our goal at FAR is really to provide solutions for people so that they can thrive in retirement and not just get by.
And finally, Kristen, reverse mortgages have had a somewhat checkered past. How has that changed today, and what is FAR doing to assure borrowers who might be skeptical?
Yeah, so for many years, the product was used as a loan of last resort, mostly because of how the underwriting criteria was structured. Unfortunately, that resulted in a much higher than average default rate, and that resulted in a lot of negative headlines for people facing foreclosure because they couldn't afford their tax and insurance payments. So the terms of the loans changed drastically over the last decade. And now the current products that are sold are mainly used in an overall financial plan to help people achieve their bigger retirement goals. But even with these changes, the perception issues do still linger. So at FAR, we really believe the path to change this is through investing in the borrower experience. Most lenders fund a loan and move on to the next loan. Our philosophy at FAR is that our real work begins after the loan funds. So borrowers could be in our portfolio for 10, 20, 30 plus years. And our commitment is to make sure they're as happy with the product at year 10, 20, or 30 as they are on day one. We also have a really prominent culture of education. So if our products aren't the right fit for a borrower, we don't want to force them into it. And we have alternative solutions beyond mortgages that we can offer for those who are interested in them.
All right, Kristen, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.